Welcome back to another episode of Rethink Real Estate, folks. Today on the podcast, affectionately known as now after the recording, is Dr. Rob. But we come up with a few other Aussie nicknames as we go through. But either way, really enjoyed today. It's one of those things that it's maybe a little bit taboo to go through with people. There's a lot of people with opinions in the opposite direction to this, but infinite banking is ultimately what we're talking about with Dr. Rob today. And again, I say Dr. Rob because of the extensive knowledge that he has in this and also the education that he has gone through. It presents, diving deeper into who he was prior to having him on the podcast. Was one thing that I do with a great deal of our guests is make sure that there's going to be some relevance there to the real estate community. But in this sense, yes, there is, but it's just also relevant to anybody that's listening that wants to go through that financial freedom side of things. It's an experience, and the stuff that we talk about today is stuff that I'd done 6 or 7 years ago before meeting Dr. Rob, and in essence is that it's stuff that I believe that a lot of people could benefit from if they wanted to lean into and learn a little bit more of. So hopefully today you get one step closer to a little bit of financial freedom. It is a longer journey, there's no question about it. Today doesn't have any instant gratification, unfortunately. I need to point that out. So I'm probably going to lose 100% of the viewers maybe. But either way, hopefully you enjoy. Hopefully there's a great deal of resource in this for you. Welcome to Rethink Real Estate. My name is Ben Brady, and this is a real estate podcast aimed to deliver sales strategies, marketing tips, and business insights from industry experts and myself to build a listing-focused business for the future. Let's get into it. Robert, welcome to Rethink Real Estate.
Thanks for having me, Ben.
Now, I've got to be honest, you're the first doctor I've had on the podcast. Yeah, there you go. So congratulations, first of all. That I don't know. Do you prefer Dr. Robert or what do you prefer?
Yeah, Dr. Rob, any of those are fine. It's just a sign of the over education that I've received in my lifetime, I guess.
Well, one of the amazing parts about this, we were just having a catch up off camera, or on camera, I should say, or off record, is that I can use all types of Aussie slang because your wife is Australian. You've been going back and forth to Australia for 20 plus years. But the thing that I love about this is that there's no doubt in my mind that you've been affectionately named by one of the family members or her family members, like Robbie or something with an IE or Y on the end of it. That's typical Australianism.
Yeah, that's what I tell everybody. I said, if you want to speak Australian, just put a Y on the end of everything. Chris, we're going back to Aussie for Chrissy to visit the Rellies, and we'll sit out on the beach and have a tinny together. And I pretty well got this down after my second visit here.
I totally agree with you. But I guess, Dr. Rob, what today we're talking about a few different things. And, Australia will come up a little bit in this. But first and foremost, why should somebody hang around and listen to this podcast?
Well, what we'd like to talk about today and give people an idea is how to turn the debts and expenses that they already have and use those debts and expenses to grow their wealth. So it's not about necessarily what we're going to talk about is scrimping or saving or delaying gratification or denying people's themselves things that they want to do or experiences they want to have, but just changing how they're doing a lot of what they're already doing right now to have a significantly greater impact. And another thing that I'd like to teach people how to do or give them the opportunity to learn, if we run out of time here today, we'll point them to some resources, is teach people how to get all the money back for all the cars that they're going to drive, own, or lease for the rest of their life. Now, if we ask your listeners, I'd be curious to know how many of them have gotten any of the money back for any of the cars that they've ever bought, driven, or owned so far at this point in their life. But if they want to learn how to get it all back, I've got 3 cars in my garage. I got all the money back for them, and I still got the cars sitting in my garage. So if they're interested in learning how to do that, we'd love to teach them how.
Yeah, that's amazing. I think that there's one of the things that fascinates me about what we're going to talk about today is that how there's so much to absorb in these individual topics, and there's so many different strategies, different elements that you can look at in order to sometimes it's not about making more money. It's just being smarter with what you already do make in order to actually therefore take advantage of the things that are at your disposal or at your fingertips. And it usually is an alignment with somebody like you that, knows the depths of all of those. So from a topic perspective that I wanted to sort of run to first is this infinite banking concept. Okay. And that's where I want to explore. One, because I'm a greedy person, and ultimately is that I want to get some advice from you because I have whole life policies. Callistra and I have whole life policies. And there's a lot of people out there. Like I sat in a seminar recently with some people that I very much respect, and for lack of better terminology, they shit all over the concept. And
Mm.
I'm sitting there going, yeah, but I get it. But it purely was just a point of view where they just didn't either comprehend or understand it, and they wanted to influence others. And it was really interesting because I'd educated myself very deeply on this before I chose to engage, because we've had these policies now for I think 7 years, and
Yeah.
they are a significant investment every month. Like I mean it's more than our mortgage on our primary home.
Hmm.
But the reality is that I see it as a complete advantage. And and at the end of the day, you could go and buy an investment property, or you can go and buy and do all different things with that money, but there's this level of uncertainty in certain things that people chase their tails in and sort of run around trying to make this extra percentage, that when they reflect on things and they go back, they would have been better just putting it into a mutual fund, or they would have been better in putting it into the Vanguard 500 or whatever it is, and gone through way less heartache throughout the journey. And that's one of the reasons that I certainly went in this direction. So I just wanted to get your general philosophy on this whole thing.
Yeah, I mean, I think you're right, and it's interesting to your point that the lengths and amount of time and energy people will expend to defend a position or a belief system or a decision they've made, even after the point when it's become very obvious to them that the choice they made was the wrong one, they had the incorrect philosophy, or the information that they made that decision on just wasn't complete or accurate. It is mind-boggling. But if you don't mind me just sharing real briefly my experience with this, I first started looking into infinite banking concept. You mentioned that I was a doctor. My first degrees were in accounting and finance. I moved to Chicago. I prepared tax returns for large corporations, rich individuals, and did audits of companies. And I, did what everybody told me to do. Put my money into a 401k. If you saved up $1 million, you should be good. Never have to worry about life ever again. If you make that your target, I think that's probably silly and unrealistic. At this point in my life, compared to what I was led to believe back then. But in any case, I used to just look at my quarterly statements when they came, and that was about all I paid attention to it. But one quarter, I went from one quarter to the next, and it all, like 45% of it disappeared, somewhere in between there. I had no idea what happened or why, but I was very upset and angry. I'm like, holy cow, this is horrible. What if this had happened to me the month before I retired and I no longer had an income and I didn't have enough life left to recover from that? Like, I got to figure out a different way. And I first heard about this infinite banking concept. And at first I got really excited, probably like you did, Ben, because I was just looking at the features and benefits of having this system. They just don't exist with any other financial tool or instrument on the planet that I'm aware of. And if you know something at the end of our call, hang around and let me know, because I've been looking for 14 or 15 years and I haven't found it yet. But then it kind of occurred to me, like, well, this seems so good, it almost seems too good to be true.
Yeah.
And to your point, those people that were making all those comments and so forth, what I always find is interesting to ask one, I'm like, do you have your own infinite banking policy? And I guarantee you, if you do that, because I've asked people, never found one yet that actually has their own policy. So they're speaking from a complete lack of experience, and they get probably, like these people you saw, very vented and heated up and excited and defending whatever their position is around something, and attacking something they have no experience with. I mean,
well, I think that, Robert, I think the reality is that they're talking their own book. You just said something before, is that it would probably be better if they got up there and said, guys, the reason that I'm talking negatively about this product is because of the fact that I didn't do it at a certain point in my life, and the reality is I'm trying to justify to myself why I didn't do it, or why I didn't hold on to it, or why I didn't do that. But I'm going to give you the reasons of why I sit there at night awake and talk about it in my own head.
Yeah, trying to convince myself that even though all evidence to the contrary, what I'm doing was the right path or right idea. But I went from being very excited about this to extremely skeptical, almost like Saul from the Bible. Like, I'm going to pick this apart and find the problem, and why, with my degrees and work experience, why have I never heard of this infinite banking concept? Why did nobody ever tell me about this? If it's so good. So I kind of set about trying to pull it apart and disprove it, and and show everybody it was a scam and it wasn't true, it wasn't false. Well, I wasted a year and a half not getting my banking set up, because ultimately I came through it and realized, like, no, actually every single thing they're saying is 100% accurate, completely true, and I couldn't understand why everybody wasn't doing this. I think I really have figured that out over the time I've been teaching people about this. It's because most people have never heard about it, and of the people that have, they just really don't truly understand what it is exactly. If they did, I really truly believe everybody would be doing this. I mean, this is what all the richest people in the United States do. It's what all the largest banks in the United States do. My mentor pointed out to me, he said, well, that guy that lost 45% of your money and was talking negatively, like you said, these guys, about this infinite banking concept. I know that their parent company is Citibank. He said, go to this website. It's called BOLI. That's a good one for your listeners to write down. It stands for Bank-Owned Life Insurance. And you can literally look up how much life insurance any bank in the country owns, whether it's Wells Fargo, Bank of America, your local bank, and find out how much. And so I found out Citibank actually had 35% of all of their assets tied up in whole life insurance contracts. That was more than their real estate. That was more than their stocks and bonds combined, to the tune of tens and tens and tens and tens of billions of dollars. So I was just like, well, why aren't all of us just doing what the largest banks and the Rockefellers and all the richest people in the country are doing? I mean, every one of our U.S. senators and nearly all our congressmen have their own infinite banking policies. Joe Biden's got over $2 million in his personal banking system. They don't just necessarily want all the rest of us to know about this, but that's what all of them are doing.
Yeah. So let's explain how it works from a logistic perspective for somebody that's sitting on the other end of this going, I've read something, I've heard something, I'm skeptical of it. I've maybe heard the infinite banking perspective. How can we give them within a short period of time, over the next 10 minutes or so, giving them, the cliff notes on making this more accessible to them, but also giving people a little bit more of a broader understanding of what this is? Because I've got to be honest, is that I only did it because I got advice to do it. I dug surface level on it, and I'm like, this makes a great deal of sense. What else am I going to do with it? I need to do something outside of real estate, because at the end of the day, real estate's what I know, and I want something else that is external to real estate. I've got to be honest, I'm probably here with the policies, with a pretty high extent of policies, and I probably don't understand it as well as what I ultimately should. And I'd love some education on how to take advantage of the infinite banking element of it.
Yeah, that's one of the things our company does, I think, really excellently. Not only do we get on and educate people, get on podcasts and put out YouTube videos and provide a lot of education up front, and then people will, hopefully that's enough for them to understand why they need to start doing this. But we feel like that's when our work really starts, is providing the support on the back end, is really creating a banking spreadsheet, like with your bank, your debts and expenses, or maybe potential investments you're looking at, and talk to you strategy about how to utilize your banking system most effectively, most efficiently. Make sure you're growing the cash and it's accumulating and compounding most effectively, because that's always going to be in flux. You're going to buy things and sell things in your life, and so it's going to change that. But I would say, as far as the thing that most people have no idea that you can do with this is, if you create your own banking system. So some of us have been taught that you should save 5%, 10% of your income. If you're really aggressive, maybe 15%. But where are you putting that? Are you just putting that into a Wells Fargo savings account, making 0.06% interest that you got to pay tax on? It's all exposed to liens, judgments, IRS decisions, lawsuits. Or are you creating your own bank where it's off the balance sheet, where nobody can see it, nobody knows that it's there. It's not considered part of your assets, yet it's as liquid as it is at Wells Fargo, because legally it's considered part of the death benefit of your policy, but practically, like I said, it's as liquid as it is at Wells Fargo. And it gives us the ability to put that money into that savings, so sort of create a forced savings. So all of us talk about savings and we know we should do it. Very few people do it. So I tell people this is like a supercharged savings account that comes with a bill. So you're more likely to actually do it if it's just part of your, auto bill pay or what have you, and it's going into this liquid account. It could act as your emergency fund. It could act as your children's college fund. It could act as part of your retirement fund. It's kind of a one bucket system. But what it allows us to do as we build up the cash values inside there, we could borrow that. And so we have a lot of people in the real estate community. I know you're in the real estate world, and what they do is see this opportunity where they're earning a rate of return and the cash is growing, accumulating, compounding inside the policy. And then they can take loans from the general fund of the insurance company using their life insurance policy as collateral and loan that out to, say, somebody doing a flip on a piece of property that needs access to capital for 60 days. Lend them $100,000 and they offer to pay you 6% to have access to your capital. At the end of 60 days, they return your $100,000 to you plus the 6%, $6,000 they promised to you. Meanwhile, all that $100,000 continues to earn interest and dividends inside the policy and grow and grow the cash and accumulate and compound inside the policy the whole time that you have it borrowed out. So you're literally earning a rate in two different places at the same time. And that's the specific feature and benefit of this system we're talking about that just doesn't exist anywhere else, out there on the planet with any other financial instrument.
I think one of the scary things that I looked at when I was first originally looking at it is that obviously you pay yourself a certain amount of money out of your company, and then, or again, if you're looking at the way that most people operate as independent contractors within the real estate space, the money that they would have to ultimately use in order to pay the monthly, or the annual, whatever way you choose to pay your whole life, okay, is that on average, when it comes down to it, is that it is a lot of money because that is after tax money that you're going to have to be using in order to fund that policy on a monthly basis. And I looked at that and I'm like, okay, well, this is a pretty significant payment post-tax, okay? And the one thing that you do get a little bit frightened about is that you go, okay, well, I'm going to have to maintain this payment for, I think, excuse me if I'm wrong about this, but between 20, it's at 20 or 25 years, I can't remember. Most of the time, depends on the policy, I'm assuming.
Yeah, with the types of policies we typically design for people to optimize them for the infinite banking system, we ascribe very closely to the principles outlined in a book called Becoming Your Own Banker by R. Nelson Nash. So if any of your members don't already have that in their financial library, I highly recommend it. I think it should be in everybody's financial library. But so we design these policies to front load them with cash in the early years to maximize the cash accumulation and growth. But then after about year 10, we're able to dial that back and drop those premiums down by about 60% because they're not needed anymore to make the policies continue to be efficient and grow and accumulate cash at an astonishing rate.
Yep.
I mean, usually the cash values are doubling, the cash on cash return of the premiums we're depositing by about year 10 or so.
Right. And so correct me. So where I was going on that angle is that I looked at it and I'm like, well, this is a significant investment post-tax income. Gotcha. And then but then the thing that really was attractive to it, and tell me if I'm wrong here, because again, I could have this completely out of line, is that when you realize the returns, or when you're using that infinite banking element of it, is that you don't pay tax on the gain. Is that correct?
Yeah. So we're sort of paying tax on the seed rather than the harvest. So you're right. Once you get those dollars, whatever dollars are that you're getting in there, whether it's $2,000 a year or $200,000 a year, everybody's in a different situation. We tell people to start where they're at to get where they want. But yeah, once you get those dollars in there, they're safe and secure. You got them into a tax-free environment. You're getting the government the heck out of your hair. Those dollars are going to grow and accumulate, and you'll be able to use those now or later or in the future without asking anybody's permission, without filling out any paperwork or justifying what you're using it for. And you'll be able to use those dollars tax-free. And when you die, they're going to pass on to your heirs 100% tax-free, as well in the future. So yeah, really good point that you put out in there. I had somebody explain to me one time, they used an example, they plucked a seed out of a ear of corn. So that's one seed. And if I plant that, the average, stalk of corn is going to produce a ear of corn with 500 kernels on it. And usually about an average of 3 ears per stock. So I just turned one seed into 1,500 seeds. Would I rather pay tax on the one seed or pay tax on the 1,500 seeds?
Yeah, I think that it's such a good point. Now, I think that one of the things that most people don't understand, though, is that, and certainly, and the reason I say most people is because there was a gentleman who worked with us a little while ago who also did this at the same time that I did it, because he wanted to learn about it, because he was asking me about some different investment stuff, because he was starting to earn pretty significant money at that time, and he went ahead and did it as well. And he was one of those people that was really skeptical about a whole bunch of it, just like you mentioned as well. But the thing that where he couldn't wrap his head around, and it was actually another Australian, and a lot of people that are the listeners are familiar with Jason, who used to work in a company, is that there's a couple of different reasons that I think that we were very skeptical in the beginning of this. First and foremost is that, one, the return on paper is not significantly wonderful. Like, at the end of the day, I think that we got sold into the factor that over the last, call it 20 years, it's averaged out between 5 and 6% return on that money. Again, I might be completely wrong on that, Robert. So please correct me. Correct me if I'm wrong there. But the other part that we as Australians really didn't understand, and I'm going to say something that's a little bit denigrating to our culture, and I don't think US people understand this, because you've grown up here, you haven't been exposed to another culture, is that one of the really attractive things about, from an Australian perspective, coming over to the US was the fact of the entrepreneurial spirit that there is here. And for example, is that you are taught from day one in school, save your money, right? My dad is an example of this. It's like, how much cash do you have in the bank? It's like, that has actually no fucking relevance whatsoever. Excuse my language, but it really doesn't, because at the end of the day, Australia is this culture of hoarding your money. It's not a culture of, how do I take $1 or one kernel and turn it into 1,500 kernels, or whatever it was that you just gave the theory of.
Right.
And the thing that we really struggled to wrap our head around, and we sort of just went with a trust perspective of the person that was advising us at the time, was that you can take that money, like you said, you can lend it out and you can make money, or you can invest that money at the same time to get a return, whilst that money that you've lent is also still getting a return.
Yeah.
It was the thing that we couldn't really wrap our minds around greatly, that I've grown to wrap my mind around more.
Yeah, I would say that that's not necessarily an Australian cultural thing so much, because I think that's pretty common with it, because it doesn't exist anywhere else outside of this. So the first time people hear about infinite banking, including myself, the first time they heard about it's the first time they heard about it. So it's foreign. And, you have all that skepticism I told you, like, why didn't I hear about this in my accounting classes? Why didn't I hear about this in my finance classes? Why didn't I hear about this from these large corporations I was doing these audits and tax returns and so forth from, if it's so good. But I turned from, Saul the persecutor to Paul the evangelist, telling everybody that would listen, to about this. But I do get that mindset from Australia, but I think that's just a common thing of people having a hard time wrapping their mind around something they just never encountered. They don't have a comparison or a reference point for it. So I think it is, until you start using it and seeing it and it's real. So some of our clients will start out with smaller policies, and I'm totally okay with that, because I know then they're going to get with our team. They're going to build out their money multiplier spreadsheet. They're going to start using their policy and seeing like, oh, wow, I'm able to recapture these dollars that were leaking and, disappearing out of my life. Because, even when people get into higher income brackets, sometimes they struggle with retaining their wealth because they have all these leaks in their bucket and they have never, thought about how to plug them, or, the idea of recycling, recapturing, and reusing the same dollar over and over and over again inside, their own banking system by taking control of the banking aspect of our life. Because the reality is most of us are going to spend 35% of everything that we earn our entire life, and we're going to waste that on interest on all sorts of various different things, over the course of our lifetime. If we could just, fix that one aspect in our life, and we could increase our income, or what we keep and have in our life, by 35%, just by taking back control of the banking aspect of our life and having control of it and dominion over our own money.
So there's a part of this that I just want to quickly get an answer out of you, and I want to move on to the car side of things because I'm really fascinated about that. I'm a car guy. Like, what are you talking about here? But the 5 to 6% return averaged out over a period of time, is that accurate or not?
So that's people ask us that, so we have to give them a straight answer. But that's just looking at year one, and people are
Mm,
often trying to compare apples to apples, thinking of this as an investment. It's not, because
mm,
an investment is something that has a potential to go up, but also has a potential to go down.
correct.
This can only ever go up because it's guaranteed in a contract with an insurance company that says it will. So you're never going to have a down year or bad year or slow year. And I've been doing this for 15 years now, and I've seen exactly that. In the first year, that was those small returns. But now in year 15, because the effect of compounding, everybody's heard of compound interest and everybody talks about compound interest, but nobody does it. Because even if you've got the money in whatever vehicle that you're saving, you're earning an interest rate on, even if it's compounding, as soon as you use that money, it stops compounding.
Yeah.
So whether it's in some mutual fund or if it's in Wells Fargo saving, as soon as you take the money out, you stop earning money on it. With this, all the dollars we get into our banking system will continue to earn, and compound for the rest of our life, no matter what we're doing with the money or how we're using it and using it in another place. And I think that, again, is just a really hard concept for most people to wrap their head around. They just don't have a reference point or any experience with anything that's ever done that for them before.
So, quick question before we move on is that can you make a bulk payment? So, let's say that you do have a small policy at the moment. Like, can you make a bulk payment into that policy? It's something that I haven't actually asked. The people that set up our policies.
You can, but the best way to do it is think of this as a marathon. It's a banking system that you're creating. Even the product we use, whole life insurance, permanent life insurance, is sort of indicating that this is a banking system that we're creating, we're putting together for ourselves, but then for future generations that's going to last for a long time into the future. And it's best done over a period of time. Every year, we're going to continue to grow the size of that bank. There are ways to I know we won't have time to get into it on this podcast, but there are ways to put in larger chunks if people have that into their policy to sort of supercharge it. But that's a little more complex approach and take quite a bit more time than what we have on this podcast today. But so the short answer is yes, we can do that.
So tell me about the 3 cars that you have in your garage and how you've gotten the money back from them, but that you've still got the cars.
Yeah, so it's really interesting. The action in that book, Becoming Your Own Banker with R. Nelson Nash. Again, you asked for a life hack or tip. I think everybody should read that. If they get it, they get it. If they don't, read it 4 or 5 more times until you do get it, because it will significantly impact your life. And Nelson Nash goes in there and shows and actually demonstrates having this policy will do phenomenally well just over time because of the return of capital, the dividends, the interest, and the fact that it's compounding. When we talk about that, you mentioned earlier you were sold on that 5 or 6% interest return. Like I just chafe at that because that's just year one. When really what we're talking about is the fact that if you earn 5% on $100, okay, but then the next year you're going to earn 5% on $105. And the year after that, you're going to earn 5% on 110, and the year after that. And so you ever seen that game people play where they take 2 pennies and they say, if you take 2 pennies, or if you take 1 penny and you double it every day for a week, you'll have $1 million. So that's really kind of more like what's going on. It's the compounding effect of it being in there and staying in there to the point where now, instead of 5%, year one, I just got my statement for my 2009 policy, my oldest one. It showed my $10,000 deposit. The cash value has grown by $18,500 for that $10,000 injection. That's 185% return cash on cash, and that's guaranteed in a contract with the life insurance company. So to just talk about that 1 year return, because again, people are comparing apples to apples to an investment. It's not an investment. It's a life insurance contract, ultimately, that we supercharge, for these banking aspects. I know we don't have time in this podcast to get into that, but I do have a resource. If people go to our website at yourfinancialiq.org, yourfinancialiq.org.
We'll link it. We'll make sure we link it in the show notes.
Cool. The reason I was mentioning that is we do have a free masterclass that anybody can go on there and watch, where we show go and demonstrate and go through and do the math and show them exactly how they can buy all their cars the rest of their life and get all the money back for the cars and still have it sitting in their driveway. And I don't know if any of your listeners have ever done that before, but if they'd like to learn how, we'd like to show them how.
Well, I guess that I think that, the interesting part about all of this is that partnering yourself and aligning yourself with somebody like yourself or your company is a part of this that I think that a lot of people love in theory, but they actually don't action. So, Robert, tell us how, like, if somebody's listening to this going, like I'm listening to this going, at the moment, unfortunately, I'm thinking about my financial planner and like, nah, they don't give me spreadsheets. They're not very proactive. I'm kind of actually thinking about this at the moment going, yeah, they're kind of shit, So long story short is that, like, what's the next steps that if we wanted to engage, we wanted to talk to you about all of this stuff, what's the process that you take somebody through?
Well, that is actually step number one. That's why I refer people to our website. If they like the idea behind what we've talked about so far and, sort of a teaser short presentation and some of the ideas and concepts that we're just really touching on, if they go on there and watch my 1 hour presentation about the A to Z soup to nuts about the infinite banking concept, and that still makes sense to them, like, oh my gosh, why has nobody ever told me about this? I need to do this. It will give them an opportunity to set up a call and discuss with me or one of our other team members what they've learned, and we'll get all their questions answered and help them and make sure that this could potentially be a good fit for them and in their life. And I agree with you. Like I said, we do all this education because people have to understand what this is and why they would want to do it in the first place. But for us, we really feel like getting the policy is when our work really actually begins, because we want to make sure that, like yourself, I run into clients all the time. They're like, oh, I haven't had somebody show me that, or they have a banking policy. They love the idea, but I meet them 4 years, 5 years later. They've never taken a single loan. They've never used it for the banking aspect at all. And that was the whole reason they were getting in the first place. So we recognize that people are going to need a little bit of hand holding. This is new to them. Sure, they feel like they've got a good enough understanding to start doing this, but they're still going to need somebody to show them the way. And so they feel comfortable because it is money after all. People don't want to make a mistake. And so they just freeze into inaction because of a lack of confidence, I think, a lot of times. So having somebody walk beside them, and even if the wheels are starting to turn, like, man, I think I could use this for this or in this way. And to have somebody to ask that, hey, I was thinking of using this way. Oh yeah, no, that's a great idea. Ben, yeah, that's brilliant. Let's go ahead and put that in the spreadsheet and let's do that and let's attack that and work on that. Just gives people far more confidence. So then they're using it and they're really truly getting the benefit of having their own banking system, which is ultimately why people choose to do this.
I feel like this whole podcast has been a little bit of a life hack, to be honest. So, but that's where I sort of wanted to round out things, is talking about a few. Maybe it's more of a personal perspective rather than it is from a financial side of things. But just confirming your website and also the book that you mentioned again, Infinite Banking or Becoming Your Own Banker. Sorry, is what it was.
Yes.
What was the author's name again?
So his name is R. Nelson Nash. He's kind of the father of this whole infinite banking concept. I mean, the product we're using for the process that he kind of discovered and really put down in written form and coalesced together for the first time when he wrote that book is kind of the father of the whole infinite banking movement. The product has been around for 200 years. It hasn't really changed. So we know exactly how it's going to turn out. I mean, I have these policies. My dad has them. My grandfather had them. My great-grandfather had them and used them to save the family farm during the Depression because he had whole life insurance policies with cash value that he was able to borrow against to buy seed corn to plant, to harvest, so that he didn't lose the farm and the house, and it was able to make it through the Depression. So we know exactly how they're going to turn out.
And then your website one more time.
Our website is yourfinancialiq.org. Sometimes people put in com, but it's yourfinancialiq.org. I tried to get the .com, but somebody else had already latched onto that one, or probably bought it up to resell it.
Yeah. And then they want to. I'm currently getting, because we have an auction division in our real estate company. I've got this guy pestering me for San Diego auctioneer, and he wants $10,000 for it. I'm like, oh God, that's just anyway. But yeah. So let's talk about a couple of life hacks or just some of your recommendations. Is there any podcast? Obviously, you've given us a book recommendation. Anything in general that you would leave with the audience that has made your life a little bit more easy to go down. I think that everybody wakes up every day and there's an element to which they sort of lean into the discomfort of what's to approach in the day. And I've often found like this is something that I would love to do is create a podcast just around life hacks, because everybody's looking for that little bit of a hack. And I love to hear what people have. Is there anything that you could share with the audience?
Yeah, I think that would be it, is picking up and reading that book or buying the audio. You can go on Amazon. I think they have it, because I bet a lot of your listeners are like me. They consume information driving in their car, what have you better, but you can get that book on audio as well and lean it. But it literally has been the cornerstone for every financial thing that I've done my entire life over the last 15 years, from buying our last house, our current house, a commercial building we bought, our cabin up in the mountains. And just the fact that, it was slow. It took time to build and create this banking system, but a decade later plus, I was kind of almost just going about my life doing this. And I looked in there one day and I was like, oh my goodness, there's hundreds and hundreds and hundreds and hundreds of thousands of dollars inside there. And even when, you're in business, you realize that people lose their minds or get their nose out of joint and, even threaten a lawsuit because they slipped in your driveway on the ice. You don't have to deal with that when you're in Australia, but, and just, the panic that overtakes you. But I was always able to go from that panic state to very calm very quickly, because I realized, you know what, they could take my house, they could take my business, they could take my cars, they could take everything in my bank account, but they could never touch all those dollars that I have sitting in cash value in my whole life insurance policy, because legally that's considered part of the death benefit of my policy, not part of my assets. So I was like, you know what, even if they take everything else, I could start over, rise like a phoenix, because I have all these, cash and assets that are off the balance sheet that nobody's going to ever have access to or even know that I even have.
Yeah.
And that, to me, for the peace of mind as a business owner, massive life hack, just for my mindset and not having to be stressed or worried when those things inevitably, if you're in business, I don't know if that's happened to you, Ben, but if you haven't been sued once or twice or have been threatened by it, you're not
going hard enough. As far as I was told that by somebody, is that if you haven't been sued at least a dozen times, you're not going hard enough. I'm like, oh geez, well, yeah, no, I've got that covered. We're good.
It's just look forward to, but
yeah, no, indeed. Well, hey, look, we really appreciate the insights that you've given us today. I think that we're going to make sure that all of your information is available into the show notes, so that all of our audience can obviously lean into to listening and hearing and educating themselves a little bit more, because I think it's a really timely topic when it comes to certainly the real estate industry and sometimes the lack of financial depth that you see within that real estate industry. Even though these people are helping us sell and buy our biggest assets, the reality is that, hey, sometimes there needs to be a little bit more depth in the knowledge that they have external to that asset also. So again, we really appreciate you joining us on Rethink Real Estate.
Sure. Fair dinkum.
That's good. So about 75% of our audience hasn't liked, followed, or subscribed to our podcast. It would mean the world to us, and it would help this podcast more than you know to expand our reach if you were to like, follow, or subscribe on any of the platforms that you're watching or listening on. Thanks again.